Good morning, everybody, and this is your DAX day trade setups for today. So, starting off on the on the 8 hour, oscillator's not giving us anything. We're still in this range. We did get this rejection. We're back in the zone of support here, and that really is my first line of defense. And then the second one is down here, which is at 15281. Right now, there is absolutely no indication that this is anything bullish. It's looking more like it's starting to become bearish, and what we're seeing here is a potential right shoulder. So left shoulder, head, right shoulder, triple top basically. This is the neckline, this is the line in the sand, that's 15,281. Break below that on the 8 hour validates a fairly big move to the downside, which in all honesty is going to be 390 points. We're talking about basically coming back and testing this area here. And I'm going to say this area because there is structure here. So you can see there and then there. Although this is not quite structure. So you'd be probably better off saying that would be my first area. My first target, 15,039, and then my second one would be down here at 14,826. Bear in mind that's still in the uptrend on the 8 hour. So I want to see something on the weekly, so you can see a story of three crossover. What I mean by the story of three, you've got three tails to the upside at a level, and then you've got the oscillator starting to cross over. So this is a fairly decent indication that we are rejecting this area and we would be looking for support. Just look to the left, those two levels I gave you. Look at how they tie up on the weekly here. So pretty important to pay attention to that. If we pop down to the 3 hour, confusion. There was data that came out, complete confusion, big up, big down, nobody knows what's going on. This two fractals here. So we've got a bit of a megaphone formation here, right on the moving averages. Oscillator's not offering anything for all intents and purposes. We're ranging, and we're kind of ranging in an area. You can see weekly close, weekly open, and then the weekly close was there with the open further down. Not much there, but that is an area of interest, and we need to keep it there. As soon as we start dropping below these tails and start testing these tails, that starts to validate it on the 3 hours. So pay very, very close attention to what's going on here. So yesterday, above the moving averages, buyers came in, sellers came in, complete confusion. Oscillators grouped the downside, so we're still sideways. There's nothing that I'd be interested in right now, especially not after that chaos there. So the logic to me is quite simple. Get down to the 15-minute and wait for a rejection of a level which coincides with the moving averages. So you can see move down range. So what you could see today is a drop here and a retest of this area, 15,375. Nice tight stop loss above this range, and then you're looking for the bottom of the bigger range at 15,281. That is the peanut trade, shall we call it, for today, because it's really just going to be a scalp. But I think the bigger picture here is to pay attention to 15,281. What's going to happen there? If we are going to break through that area to the downside, we've got a massive head and shoulders here, and that is going to give us this 400-point move, or 385. So it's 300, and let's call it 380. Okay, so it's a 2.5% move to the downside. But that is what I can see that's on the cards at the moment. I don't trust it though. I don't trust what I'm seeing here. Don't trust the fact that the moving averages are flattening out like this. It's never a good sign, because what you're going to get is you're going to get people that are going to jump in with preconceived ideas to the downside, because there's a lot of noise around that, and then you're going to get the institutions just waiting at a different levels. You know, they quite like the pattern that it's looked, but they've got a different idea, and what they'd be looking for is to drive it up. So it's really, really a dangerous place to be in when you are ranging like this. So logical thing is to sit back and just leave it alone. You know, but sometimes there are scalps available, and I do think that there is a scalp brewing here, even if it is just a move to the bottom of the bigger range, but that is definitely on the cards. Uh, the move to the upside, which could also happen in this zone, but we're going to have to get above the moving averages, and to get above the moving averages means I need to get above probably, there's little levels there, little levels to the downside, but that's going to be the level you need to get above, and that's 15,430. And if you just look at the weekly and you look at the 8-hour, okay, the 8-hour oscillators are not really helping us, but the daily definitely is pointing to the downside, and then the weekly is also indicating extremely overbought. So I'd be, it's got to be patient because we start getting dropped below 15,281, which is the head and shoulders. You can see there's fairly good structure for a decent move, a pullback onto that. It's not necessarily going to fall to the floor, but it definitely does ease the pressure a bit from overbought conditions here. So that's kind of my view today. Sit on the sides unless we start seeing a decent break of this little range, which gives us a move to the downside, stop there. And to be quite honest, I would take the bulk of the profit off down here, but I'd leave a small position on just in case we do break. And if we do break, then you've got an ability to add to that position. But anyway, that's kind of my bias at the moment. It does look like we're probably looking for a move down, whether it's to test the bottom of the range or whether it's to form a head and shoulders. But bear in mind, head and shoulders only in play once the neckline breaks. Until then, it is a range. Okay, anyway, that's it for me today. Stay safe. If you're unsure, rather keep the money in your pocket. Don't try and second guess it. It's pointless. You're just going to lose. Anyway, we'll catch up with you tomorrow. Cheers for now.